Looking at Nigeria's stock markets, despite another disappointing inflation report, Nigerian stocks soared, adding 2.1 trillion naira, that's about $4.9 billion last week. Investors piled into telecoms and consumer goods giants like Airtel Africa and PZ Cussons, pushing the year-to-date return to a staggering 41.39%. This bullish sentiment suggests investors are looking beyond short-term economic challenges, betting on long-term growth potential. So at this time, let's quickly take a look at the numbers. We start by looking at the broad index from the last trading. Of course, all share index. We see 105,722.78, and that's about 3.79% gain in there. Let's quickly look at our market capitalization. Also, we saw a cap of 57.85 trillion. That's almost like what we witnessed last week, Friday, with about 3.79% appreciation also. And I'll take a look at the top price gainers for the week. We see Julie PLC topping the chart with 1 naira 47 kobo. That's about 45.54% gain. Geregu Power seeing about 901 naira in gains, and BUA Foods 357.50 kobo, and of course Royal Exchange and Dow Communication seeing about a minimal 84 kobo, 81 kobo in terms of appreciation. We look at the top losers for the week. Now, Maya PLC tops the charts, about 18.96% in losses was being recorded. Morrison Industries saw about the same 18.69% in loss. Deep Capital, Flour Mills, Unilever, Nigeria Limited also seeing some sort of losses in their markets, looking at 14.29% in loss, and of course Unilever 10.81% according to what we have. A quick look at the sectoral performance for the week. Now, we see a strong claim coming from the banking industry, but then it was about a loss anyway, a strong loss, I must say, I beg your pardon, about 1.34. Insurance saw a 2.66% in gain in terms of appreciation and performance. Oil and gas 5.25. Consumer goods, industrial goods also, we saw a bit of appreciation in terms of the performance. That's 10.96 for the consumer goods. And well, for the industrial goods, it was a loss of about 1.83. So that's how it went down for the outgone week. When we go on a break and return, we'll look at Nigeria's legal tender and, of course, what it means for personal and business travel allowances. Do stay with us. According to reports, the Central Bank of Nigeria last week announced that cash payment for personal and business travel allowances would no longer be allowed. The directive was conveyed in a circular address to all authorized banks, signed by Hazal Mahmood, the director of its Trade and Exchange Department. Now, to promote transparency and accountability in the forex market, the Apex Bank directed all banks to process the allowances through electronic channels. At this point, Dr. Josh Bamford, partner and head of the Transfer Pricing Services Practice, Anderson in Nigeria, joins us to shed more light on it. Dr. Bamford, it's nice to have you around.
Thanks for having me.
So what are the implications of the Central Bank of Nigeria's decision to no longer allow cash payments for personal and business travel allowances?
I think before we can even talk about the implications, we need to try to understand why the central bank is issuing such directives. That then puts it in proper context what the implications would be. It's obvious that the Central Bank of Nigeria is moving from the previous regime where there was some significant intervention of the government in terms of setting the exchange rate, or fixing it within some particular bound. In the official market, and allowing the power market to, kind of float a little bit. But this current administration has moved significantly away from that particular regime to a more flexible regime or a free-floating regime. And what that means is that their major goal is to bring efficiency in that particular market, which is the foreign exchange market. Part of the efficiency is to also ensure that there's transparency in terms of transactions that occur within that particular market. So specific to this particular directive, one of the major source of demand for Forex is when individuals travel or businesses, people in the business arena travel. And usually they get these travel allowances from their banks. And the banks issues those travel allowance in cash, which is, whether it's USD or euros or what have you. However, for the central bank to be able to track the amount of, Forex that goes to, individuals or businesses for their travel allowances, they are moving away from cash payments to, electronic transactions, such as, crediting your debit card with that particular amount, so that when you travel, you'll be making payments with your debit card as opposed to making payments with, cash. So I think in terms of implication, if you look at it from the CBN's perspective, that transparency and ability to track those transactions between the commercial banks and their customers for that particular purpose, which is the travel allowance, is very important in terms of gathering data and having a sense of what is actually going to a particular source of demand for Forex. So that transparency and accountability will actually help Central Bank of Nigeria achieve the efficiency that they want to achieve within that within the Forex market. From the perspective of individuals and businesses, in my view, as long as they are going to destinations or jurisdictions where acceptance of credit cards, debit cards are widespread, whether it's a Visa card or a MasterCard, I don't think that should have any adverse impact on them, unless you're going to a jurisdiction where you are a bit wary whether they will accept, a particular card that you are using. But if that's not the case, then I don't think that this particular directive should have a significant adverse impact on individuals or businesses when it comes to travel allowances.
But then if we begin to have huge traffic via online channels for transactions, don't you think it would still affect these businesses and individuals? Because when you look at the level of data or internet penetration and the quality of internet services in Nigeria, to some, it's said to be deplorable and not encouraging enough. So don't you think that will be a challenge for these set of people, most especially businesses and those who make do with having cash as against now having to use online channels?
Yeah, I fully agree. If there are some glitches or significant glitches in terms of the transition from cash payments to electronic transactions, then obviously, at least in the short term, you might have some problems for those who are demanding those allowances in Forex. But by and large, moving to a more electronic means of payment, is a direction that most economies are moving towards. So at some point, I mean, an argument can be made whether the transition should have been a little bit more gradual as opposed to immediate. But for me, I think that it is the step in the right direction, because we are facing a currency crisis. The Naira is weakening day by day against hard currencies such as the USD. And it's incumbent on the Central Bank of Nigeria to ensure that there's transparency and there's a tracking of data to help them with their policy formulation and execution. So I think that the step in the right direction. However, should there be such glitches, then I think maybe the transition should be a bit more gradual than immediate.
So then how do you think that these sort of people or, of course, category of those who will be affected by this, how do you think they can be prepared to, of course, acclimatize to this particular change by the Apex Bank?
I think, if I'm in an individual who is going to travel, my first question would be, should my debit card be credited with the amount of travel allowance that I need for me to travel? Will that card be acceptable in the jurisdiction that I'm going to? If it's the US or most of the Western advanced economies, I don't think that should be a problem because most transactions are electronic anyways. But if I'm going to a jurisdiction where I have concerns or I'm worried about, the acceptance of my debit card or credit card in terms of day-to-day transactions, then that becomes a concern, which means that I need to be thinking about having a good mix of some cash versus, what will be credited to my debit card, in the form of travel allowance. So I think that should be the reaction of individuals and businesses, depending on your destination or wherever you're traveling to. How is it going to work out, in terms of the use of those debit cards for electronic payments? And if there are going to be challenges, then you might want to have a mix of cash and, and the debit card when you're traveling. So I think that should be some of the things that individuals and business should be considering when it comes to the issue of travel allowances.
All right, so what are the long-term implications of this decision for the use and probably availability of FX in Nigeria?
I think this is just a slight bit of a number of policies that the Central Bank of Nigeria has been implementing. I don't think this has a significant impact in terms of the supply of Forex. To look at the impact on the economy, you need to look at, what the Central Bank of Nigeria has been doing in terms of the Forex policies, for the past 1 month and more. Remember, they started by ensuring that there's, adequate supply of Forex from key channels such as the commercial banks, where they forced these commercial banks to actually supply the excess Forex that they were keeping to earn returns into the Forex market. So that was one measure that led to a bit of stabilization of the exchange rate, at least in the short term, around 1,400 to a dollar period, until it started depreciating again. So there are a number of measures. This travel allowance issue is just a measure to improve transparency and accountability. But I think the bigger question is whether the shift from, a more fixed exchange rate regime under the previous administration versus the more flexible exchange rate regime that this current administration is implementing, which of these two actually is inuring to our benefit, both in the short term, what we are seeing right now, as well as in the long term. And what you will see if you are focused on, the exchange rate stability, then there's a tendency for you to think that maybe the measures that the Central Bank of Nigeria is implementing right now is actually not working. Because when the current government took over, in June 2023, we all know that the dollar was equivalent to around 450 naira in the official market, and in the power market, around 650. By December, you look at the official rate, you had already notched a dollar to over $1,000. End of January, it was around 1,450. As of Friday, power market is around 1,670, and official rate is around 1,535. So that is the bigger question that is on the minds of people, whether all these number of policies and circulars that are going around to bring efficiency in the Forex market in terms of Forex coming through the official channels and also taking away restrictions in terms of demand for Forex, is it actually achieving the type of exchange rate stability that we're hoping for? And the clear answer in the short term is no. In fact, it's worsened it. So it made people wonder, should we even have some intervention? And we've heard, the opposition leader already making some recommendation in terms of some level of intervention. So those are the bigger questions I think we need to be addressing.
Dr. Josh Banfo, partner and head of the Transfer Pricing Services Practice, Andersen in Nigeria. Thank you so much for sharing your thoughts with us.
Thank you for having me.
Even as we penned the Nigeria electricity tariff and meter conversation, let's quickly take a look at this, which has to do with the Lagos State government issuing a warning stating that homeowners who are found to have rented out their apartments for excessive prices may face penalties. This information was revealed in a statement made by Maruf Akinderu Fatai, the Lagos State Commissioner for Housing, who also threatened to use force against allottees who engage in unethical behavior. Akinderu Fatai said residents of various state housing schemes have filed complaints about the high rents being charged by homeowners, adding that the state government will withdraw allocation from culpable homeowners. At this point, Liberos Oshoma, who is a lawyer, joins us to unpack this. It's nice to have you around. Thank you so much.
Yeah, my pleasure. Thank you.
So let's start by understanding, does the Lagos State government or a government have the legal authority to penalize landlords based on rent levels?
Yes, the Lagos State government, like we all know, make laws to regulate, housing, including laws for landlord and tenant. So there are regulations, and the Lagos State government is statutorily empowered to so do. But the caveat here, the problem is what is leading to these exorbitant charges by landlord. That's what the Lagos State government should be concerned about instead of penalizing landlords. Because landlords are taking advantage of the market supply, the forces of demand and supply. Is it not the same government that had said they want forces of demand and supply to determine prices? And so, what the government wants to do now is to have a price control. But in controlling price, you also need to understand that the product needs to be available. When the product is not available, that's what affects price. That's where the prices go up. And in most cases, this is not the first time in the administration of Babatunde Raji Fashola, Lagos State government also attempted to control prices of rent, even though they excluded GRA where they have their properties. They attempted to control price, and also it is part of the laws in Lagos State that a landlord cannot increase rent above 20% at a particular time, a tenancy year. But when landlords are confronted with these things, the landlords simply just tell the tenant, well, go and stay in Lagos State houses. For my own, this is the price it's going for, considering the fact that this is the only commodity that the landlord also has, to eke out a living from. It is the non-availability of adequate housing that is actually leading to all of this. And so until we begin to address the issue of housing, availability of housing, we will continue to go around in this circle. This is not the first time, and it's not going to be the last time.
Okay, so we probably may need to also ask the question, how does the government determine if a rent is overpriced or underpriced? Would there be an evaluation that there are parameters that are being used to judge what price is payable by a tenant to landlord?
Yeah, we all know that you will know what is overpriced. But the question is, you're looking at just the tenants. You're looking at just the property. You're not also looking at the cost of land. What is the cost of purchasing land in Lagos? Lands in Lagos are overpriced. There are no parameters for determining prices of land in Lagos. You just hear 15 minutes drive from the new Dangote refinery, 20 minutes drive from the new airport, and 30 minutes drive from Victoria Island, and the price is 150 million. And what are the parameters? What amenities are available for determining that price, the price of land? Nothing. My estate, for example, in Bagada, during COVID, when you would think that there is unavailability of funds, a few persons just came, decided to overprice the land that people were buying for 40 million. Somebody just came and said, I'll buy it for 80 million. And then the next man says, if my neighbor can sell his own for 80 million, then I will sell mine for 90, 100 million. And that was how the prices just went up. And the next thing you hear, 5 minutes drive to Third Mainland Bridge, 2 minutes drive to Antony Village, 15 minutes drive to the airport. And these are the parameters that are used to, measure land, sale of land. And so imagine now you're also having to contend with the cost of cement. And what the landlord does is the fact that he built the house for today, and he wants to make all the money that he has invested in that house in 2 or 3 years. Also, there are lack of mortgage facilities. where, mortgage companies would build and you can buy and begin to pay, gradually, depending on your income. All of these facilities are not available. We buy land, we buy properties as if we're buying yam from the market, as if we're buying a piece of tomato from the shop. So when you do that and you put all of your investment in a real estate, the tendency for you to want to recoup your investment also in 2-3 years, will be there. So there are so many factors that determine, the prices of properties. Why it is good for government to regulate, to put its foot down. Government also need to do, like I said, do beyond regulating. Government needs to provide opportunities. Are we encouraging mortgage facilities? The answer is no. You have the Federal Mortgage Bank. You have a lot of people that have subscribed to the Federal Mortgage Bank and they are still waiting for allocation. Building societies are no longer available. People put their money in real estate. Go to Orchard Road, where people have built houses. And how are they selling? You sell, you want your cash immediately. You want to go into another investment. Even the government is not regulating these buildings, indiscriminate building. Now they are demolishing, which is also good. Why do you demolish a property and then you leave out the man who gave the approval from the ministry? There are people who gave approval for that building to be built in a wrong place. Who is prosecuting these people to serve as a deterrent to show that this can no longer be business as usual? So when you leave them, you demolish this one, you leave your people, continue to give illegal approval to builders.
Okay.
Builders, they buy land, like I said, they buy land like as if you are buying a television from the supermarket, and he also wants to make his money. He wants to turn around his investment. There are no building societies. The ones that are available are very few. All you have in Lagos are developers, and developers it is the cost, the economic indices that determine the cost of what the developers will do.
Now let's do this. You've talked about how it obtains in Nigeria and of course in Lagos. Now let's scale it a bit further, look at other climes and see what obtains. Now looking at these practices, the issues that you have raised, and of course this particular regulation. Now, how does Lagos' approach to this rent regulation compare to similar policies in other major cities around the world, and what are the lessons that you think can be learned in terms of successes and failures if we were to correct the narrative in the country?
Look, let me tell you, last week I was in Miami, and I discussed with a couple of friends, who are property owners, and we're at Miami Beach front, and the prices of properties, as expensive as they are, even people are complaining. I discovered that some of them are even cheaper than the prices of land in Lagos, in Nigeria. So, and then these properties are paid on mortgage. Nobody, even as I speak to you now, I just got into London. Nobody buys property cash down. Yeah. It's only some churches from Nigeria, they want to set up and they buy cash down, because they collect tithe and offering. Go to Europe, all over Europe, everybody buys property via mortgage. So the pressure is not on your cash. The pressure is not on you. And so you have building societies. Okay, I visited a friend in Atlanta, in Douglasville in Atlanta, and he showed me a whole new area that has just been developed. What happens is, what do we do in Nigeria? We say layout plan. We just take one bush, one big farmland, and you take a surveyor, you say you have laid out the plots, and that is all. People begin to buy farmland, and before you know it, it's all developed, no proper planning. But in other climes, it is the building society that lays out the plots, all of the facilities and amenities are installed, and then you come, you put your house there. The building societies, in collaboration with mortgage banks, build these houses, and then they sell, because government also subsidizes these funds from mortgage banks, and then they begin to sell on mortgages. So the pressure is not on the people.
Okay.
But in Lagos, I can tell you now that in Lagos, where you are now, if all the properties you probably have bought, you bought them cash down. Apart from government-owned properties, apart from government low-cost housing that they are selling on mortgage, and when you even do the calculation of the mortgage price, it is almost times 2 or times 3 of what the value of the property should be. So if government that is even selling properties on mortgage, government scheme, the prices are exorbitant, the common man cannot access them. How come even the properties, how do you now expect the properties are owned by private individuals who have to deal with the economic crisis, the economic issues? How do you now expect them to reduce the prices of their own property?
Okay, so Mr. Sharma, now will penalizing these landlords or homeowners for high rent actually lead to lower prices, or will it create some sort of unintended consequences, probably like a limited housing availability?
It is even impossible for you to penalize the landowners, because how do you as a tenant, you go to the rent tribunal or you go to Lagos State government, you say, my landlord is collecting so and so amount. And then what is the contract that you have with the landlord? This is the tenancy agreement you voluntarily entered into with the landlord. It's a voluntary agreement. The landlord didn't force you. You paid all the money that the man requested. And the Lagos State government says, oh, look, this money that the landlord charged you is too exorbitant and you shouldn't have paid. And so for that, is there an offense there that you willingly enter into a contract? Or you say, the landlord says, okay, well, I want to rent a house and I'm collecting 3 million naira per annum. The Lagos State government has said they should not be collecting more than 1 year, which a lot of them have complied with. But you now say, the landlord says, I want to collect 3 million naira per annum. The Lagos State government says, you go to Lagos State government and say, the landlord wants to collect 3 million naira per annum. And then the landlord comes and says, no, I didn't charge you 3 million naira per annum. We were just negotiating. And in the alternative, if the Lagos State, the tenant now insists that Lagos State government says you must collect 1.2 million, and the man says, well, okay, I'm no longer renting the house, I want to make use of it. How will Lagos State government now force that tenant to occupy that premises? Like you said, the unintended consequences will be much more than the remedy that the Lagos State government is trying to correct.
So at this point now, we are at the crossroad. Is there any regulatory measure that can come into play right now to ensure that tenants don't pay exorbitant amounts for apartments they want to rent, and landowners would not also lose monetary value for their properties? Any measure that could come into play in this regards?
What I am saying is the Lagos State government, just last week or so, Lagos State government spent almost about 6-point-something billion to pay outstandings for pensioners. Fine. Lagos State government also can earmark such funds to partner with developers, not just because you don't have building societies. Partner with developers and say, okay, we're going to put these funds down. We're going to give you lands. And then you build these houses, and the cost of these houses, we will be in charge of giving out these houses at so and so cost. So these are measures you can take. And so by the time it is available, I know that I have a property that I can rent for 1.2 million. Why would I want to go and rent one for 3 million? So it now depends on your tastes. So once the alternative are provided by the government can then now begin to say, look, we are regulating because they own the properties. You can't regulate so much what you do not have the control, too much control over. Yes, you created landlord and tenant laws, allow the landlord and tenant to deal with those matters when the matters get to court. But now say, no, I must determine what you will charge per rent when you don't even have to give. It becomes a problem for the tenants. And also, the landlord, nobody will want to invest in real estate in the States because the government is unnecessarily stifling that sector. So it's a chicken and egg situation. So government needs to do the first thing first by ensuring that you provide alternative for people. That then it becomes easy for people to gravitate towards those alternatives. It is when the commodity is scarce that the price becomes so high.
Liberal Oshoma, thank you so much for sharing your thoughts with us on the program.
My pleasure.
And that's about the size of our show this morning on Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can visit our website, www.newscentral.africa, and equally download our mobile app on App Store and Play Store. Until next time, I am Lekon Onabanjo.